Welcome back to Boni's Life, your premier destination for deep, fact-based analysis of the global crypto markets. I am Boni, and today we are diving into a comprehensive review of the crypto market for the week of May 5th to May 8th, 2026. This has been a week of extraordinary volatility, driven by macroeconomic data, geopolitical escalation, institutional shifts, and some of the most significant industry events of the year. If you want to understand exactly where the market stands right now and what triggers to watch this weekend, you are in the right place. Grab your coffee, settle in, and let us break down the data, the events, and the trading opportunities you absolutely need to know about. Let me start with the big picture. As of right now, Friday, May 8th, 2026, Bitcoin is trading at approximately $79,822, according to Coindesk data. The total cryptocurrency market capitalization stands at $2.744 trillion, according to CoinGecko. Bitcoin dominance is holding firm at 58.3%, while Ethereum accounts for 10.1% of the total market. The 24-hour trading volume across all exchanges is approximately $97.4 billion. Ethereum is at $2,287, XRP at $1.40, Solana at $89.49, and BNB at $642.57. Now, what is particularly interesting is that we started this week with Bitcoin at around $79,824 on Sunday, rallied all the way to $82,000 by Tuesday, and then gave back those gains by Thursday. That round trip tells a powerful story, and I'm going to unpack every chapter of it for you today. Before we get into the daily breakdown, let me give you the weekly summary in context. Bitcoin posted a 7-day gain of approximately 6.26% and a 30-day gain of 12.79% heading into this week. The broader trend since the cycle low near $63,326 in late February when the US-Iran conflict first erupted has been one of steady recovery. We have climbed from that war-induced bottom through $70,000, through $75,000, and now we are battling at the $80,000 level. The Fear and Greed Index currently reads 40, which puts us firmly in fear territory. The CBBI, or Colin Talks Crypto Bitcoin Bull Run Index, sits at 39. Both of these readings suggest we are not in euphoria, we are not in capitulation either. We are in that uncomfortable middle ground where the next big move is being loaded like a spring. And as I will explain shortly, the derivatives data from Coinglass tells us that move could be absolutely explosive when it comes. Now let us get into Monday, May 4th. The week opened with Bitcoin at $80,925 and a massive volume spike of $55.78 billion, which was the highest daily volume of the entire week. Several major events converged on this single day, making it one of the most eventful Mondays we have seen in months. First, Strategy, formerly known as MicroStrategy, reported its Q1 2026 financial results. The numbers were absolutely staggering. The company posted an operating loss of $14.47 billion, compared to $5.92 billion in Q1 2025. The loss per share came in at $38.25, more than double the analyst estimate of $18.98. This was driven almost entirely by a $14.46 billion unrealized loss on its digital asset holdings, as Bitcoin fell from approximately $87,000 to $68,000 during the quarter. But here is the bombshell that truly shook the market. Chairman Michael Saylor, the man who built his entire corporate identity around never selling Bitcoin, said on the post-earnings call, and I quote, "We will probably sell some Bitcoin to fund a dividend just to inoculate the market, just to send the message that we did it." He went on to say, "The answer to how much we can sell responsibly is a function of where the Bitcoin price is, and to a lesser extent, how the equity capital markets react." This marks a historic reversal of Strategy's famous never sell stance. The company now holds 818,334 Bitcoin as of May 3rd, representing 22% growth year to date, and has paid $692.5 million in cumulative dividends across 23 consecutive distributions on its preferred equity products. Despite this potentially bearish news, Bitcoin showed remarkable resilience, barely dipping before recovering. That resilience tells you something important about the underlying demand in this market. Also on Monday, Circle Internet Group's stock surged nearly 20% after lawmakers struck a bipartisan deal on the Clarity Act, which resolved the regulatory overhang around stablecoin yields. This is enormously significant because it provides the regulatory clarity that institutional investors have been demanding for years. The Genius Act, which was enacted in July 2025, established the federal framework for payment stablecoins, and now the OCC is actively implementing it with proposed rules that detail how state regulatory frameworks must align with federal standards. This regulatory momentum is reshaping the entire stablecoin landscape and positioning the United States as a leader in digital payment infrastructure. Additionally, Coinbase announced it would lay off approximately 700 employees, or 14% of its global workforce. Citing both AI-driven restructuring and crypto market volatility, the company is eliminating what it calls pure manager roles and replacing them with player coaches, essentially flattening the organization. This is the largest cryptocurrency exchange in the United States, making significant structural cuts, which tells you something important about the current operating environment and how companies are adapting to both market conditions and technological change. Tuesday, May 5th, was the most bullish day of the week by far. Bitcoin surged past $82,000, reaching its highest level since January 2026. The catalyst was primarily geopolitical. Reports emerged from Axios that the United States and Iran were close to reaching a memorandum of understanding to end the war that has been raging since late February. Oil prices crashed by 6% on this news, and risk assets rallied across the board. Bitcoin traded in a tight corridor between $81,250 and $82,320, with the CoinGecko close recorded at $81,425. The market cap for Bitcoin alone expanded to $1.62 trillion. On the institutional front, the RK21 shares Bitcoin ETF recorded $92.27 million in net inflows, signaling renewed appetite from large allocators who had been sitting on the sidelines. However, not all ETF flows were positive. VanEck's HODL Bitcoin ETF actually saw $5.77 million in outflows on the same day, showing that institutional sentiment was not uniformly bullish. At the Consensus Miami 2026 conference, which was in its second day, the mood was electric. VanEck's head of digital assets research, Matthew Siegel, appeared on CNBC and made the bold prediction that Bitcoin would hit $1 million within the next 5 years. Michael Saylor, Senator Kirsten Gillibrand, Kevin O'Leary, and Cardano founder Charles Hoskinson all took the stage, discussing everything from institutional adoption to regulatory frameworks to the future of decentralized finance. The conference drew more than 15,000 attendees across 150 sessions and 5,000 private meetings over 3 days. Major announcements included Crypto.com launching a new travel booking platform powered by Bookit, and Binance founder Changpeng Zhao floating the possibility of reviving Binance.us, which has been dormant since its regulatory troubles. The Consensus event reinforced Miami's growing influence as a global crypto hub, with the CCN's Samuel Hood-Burke noting that the conference is big enough to attract serious mid-tier to large players while still being intimate enough for entrepreneurs and startups to network effectively. Wednesday, May 6th, was dominated by the Federal Reserve. The FOMC announced its decision to hold interest rates steady at 3.5% to 3.75% for the third consecutive meeting in 2026. While the hold itself was widely expected by the market, the vote composition was not. The decision came on an 8-4 split, with Governor Stephen Miran dissenting in favor of a 25 basis point cut. This is a rare level of internal disagreement at the Federal Reserve, and it signals that the institution is genuinely divided on how to respond to the competing pressures of elevated inflation stemming from the Iran war and supply chain disruptions versus a stabilizing but potentially weakening labor market. As JP Morgan noted in their analysis, the market's inflation fears may be running ahead of reality, but the Fed cannot afford to be wrong. Chair Jerome Powell confirmed he will stay on as a governor after his term as chair ends on May 15th, adding another layer of transition uncertainty as markets try to price in the policy direction under new leadership. Bitcoin reacted with a modest pullback, closing the day at $80,022, according to CoinGecko data. The ETF market saw modest net inflows of $46 million, a significant deceleration from Tuesday's pace but still positive. The Consensus Conference concluded its third and final day with discussions focused on artificial intelligence integration with blockchain, tokenization of real-world assets, stablecoin infrastructure development, and institutional blockchain adoption pathways. Thursday, May 7th, brought the week's most dramatic reversal and reminded everyone why geopolitics remains the dominant force in this market cycle. In the early hours, reports emerged that the United States and Iran had exchanged military strikes in the Strait of Hormuz, shattering the fragile ceasefire that had been in place and that markets had been celebrating just 48 hours earlier. Iranian state-affiliated Fars news agency released footage claiming to show missile launches at U.S. vessels, while President Trump insisted the truce remained in effect. Brent crude oil prices surged back above $100 a barrel, triggering a broad risk-off sell-off across all asset classes globally. Bitcoin dropped below the critical $80,000 support level, falling to approximately $79,000 before stabilizing around $79,822. According to Coinglass data, this move liquidated approximately $300 million in futures positions, with the majority being long positions that had been built up during Tuesday's rally. The US spot Bitcoin ETF complex saw net outflows of $269 million, with Fidelity's fund leading the exits. This was a stark reversal from the inflows seen earlier in the week and represented the largest single-day outflow in over 2 weeks. The U.S. Bureau of Labor Statistics also released the April jobs report, showing the economy added 115,000 non-farm payroll jobs. While this was a relatively strong number that gave the Fed more flexibility to focus on inflation risks, the market's reaction was muted because the geopolitical situation completely dominated sentiment. Doge led losses among major cryptocurrencies, while Ethereum slipped to $2,287 and Solana held relatively steady at $89.49. The crypto market fell nearly 4% overall on the day, according to Mexi analysis. Now let me address the Coinglass derivatives data in detail because this is where the real story of this market lives and where the weekend triggers become clear. Bitcoin's total open interest has surged by more than $10 billion over the past 5 days, reaching approximately $64.7 billion according to Coinglass data, analyzed by crypto quant analyst Doug Forst. This is the largest increase in open interest we have seen all year, surpassing levels from Bitcoin's previous all-time high formation in October 2025. According to K33 Research, Bitcoin futures funding rates have now been negative for 67 consecutive days, the longest stretch in 10 years. Let me explain why this combination matters so much. Negative funding means that short sellers are paying long holders to maintain their positions. When funding stays negative for this long while price is actually rising from its lows, it means the market is heavily positioned for a decline that is simply not materializing. This creates the conditions for a violent short squeeze. The 7-day liquidation heat map shows that a mere 4% move in either direction could wipe out billions in positions, with $3.44 billion in shorts vulnerable up to $79,400 and $2.97 billion in longs at risk below current levels. Additionally, the long-to-short ratio for Solana has risen to 1.1442 from 1.0319, indicating growing bullish positioning in the altcoin space, even as funding remains negative for Bitcoin. Let me now assess the crypto industry calendar events against what we had expected heading into this week. Consensus Miami 2026 was expected to be a major catalyst for bullish sentiment and institutional announcements, and it delivered on that front comprehensively. The conference reinforced the narrative of growing institutional confidence, regulatory progress, and real-world adoption. The Global Crypto Lifestyle Index presented at the event showed that while the US still faces gaps in everyday practical adoption, the infrastructure is being built rapidly. However, the market impact of consensus was ultimately limited because the geopolitical reality quickly reasserted itself on Thursday. The Clarity Act compromise was a genuine positive surprise that exceeded market expectations, providing more regulatory certainty than had been priced in, as evidenced by Circle's 20% stock surge and the broader rally in crypto-related equities. The Fed decision was largely in line with expectations on the headline rate, but the divided 8-4 vote introduced a new variable that markets had not fully anticipated and that will continue to influence pricing in the weeks ahead. The strategy earnings were significantly worse than expected, and Saylor's pivot on selling Bitcoin was a genuine shock to the market. However, the market's ability to absorb this news without a significant decline speaks to underlying demand strength and suggests that the Bitcoin treasury model is not solely dependent on one company's stance. The most significant deviation from expectations was the rapid re-escalation of the US-Iran conflict on Thursday, which no calendar event could have predicted and which instantly erased the gains from the peace deal optimism earlier in the week. Now, let us talk about what you need to watch this weekend. I am going to give you both technical and fundamental triggers that could define the next major move in this market. From a technical analysis perspective, the critical level is $79,700. According to analyst Michael DeFulvio in his Bitcoin weekly report, once Bitcoin reclaims this level with conviction, the cycle low near $60,000 becomes the old battlefield and is not revisited. He maintains a target of $135,000 for a new all-time high. The immediate resistance zone sits between $82,000 and $83,000, where Coinglass data shows the largest visible ask wall near $82,000 at approximately $34 million in sell orders. On the support side, bids are layered from $81,000 down to $80,000, with key liquidity pools below at $76,000 to $77,000. The 200-day moving average remains a critical reference point, with Bitcoin still approximately 35.5% below its October 2025 all-time high. The RSI for XRP, as a proxy for altcoin momentum, reads 41.26, suggesting oversold conditions across the broader market that could snap back violently on any positive catalyst. The dollar index is softening, and global M2 money supply continues to rise, both of which are historically bullish for Bitcoin on a lagged basis of approximately 10 to 12 weeks. From a fundamental analysis perspective, there are 5 key triggers for this weekend that every serious trader should be monitoring. First, and most importantly, any developments in the US-Iran situation will be the primary driver of all risk assets, including crypto. A credible ceasefire renewal or diplomatic breakthrough could send Bitcoin back above $82,000 rapidly, while further military escalation could push it toward the $76,000 support zone or even lower. The Strait of Hormuz is one of the world's most critical oil choke points, and any disruption there has cascading effects across all financial markets. Second, watch the Coinbase Premium Index, which Coinglass tracks and which measures the price difference between Bitcoin on Coinbase versus other exchanges. A positive premium indicates US institutional buying pressure, while a negative premium suggests domestic selling. This indicator has been a reliable leading signal for directional moves throughout this cycle. Third, monitor the ETF flow data closely. After Thursday's $269 million in outflows, a return to net inflows early next week would signal that institutions view this dip as a buying opportunity rather than the start of a deeper correction. The 5-week winning streak of net positive flows into crypto investment products is now at risk. Fourth, the M2 money supply continues to rise globally and the dollar continues to weaken. These macro liquidity conditions historically correlate with Bitcoin price appreciation on a lagged basis, suggesting that even if we see short-term weakness, the medium-term setup remains constructive. And fifth, with Jerome Powell's departure as Fed chair approaching on May 15th, any weekend commentary from Fed officials about the policy path, particularly from the dovish dissenters, could move markets significantly and provide clarity on whether rate cuts are coming sooner than the market currently expects. Let me also highlight something that most mainstream coverage is missing entirely. The combination of record high open interest at $64.7 billion and historically negative funding rates for 67 consecutive days creates a profoundly asymmetric setup. When the market is this heavily short while open interest is at record levels, the resolution tends to be violent and directional. The last time we saw a comparable setup was in late 2024, and it preceded a 40% rally over the following 6 weeks. I am not saying history will repeat exactly, but the structural conditions are remarkably similar, and the smart money is watching this divergence very closely. If you are a trader, this is not the time to be over-leveraged in either direction, but it is absolutely the time to have a plan ready for both scenarios. In terms of altcoin positioning for the weekend, Ethereum's ETH to BTC ratio sits at 0.02866, continuing its long-term underperformance against Bitcoin. Bitcoin dominance near 60% suggests we are definitively not yet in altcoin season, and capital continues to favor Bitcoin as institutional inflows through ETFs persist. However, the long-term chart patterns that analysts at Behind Crypto have identified mirror the 2017 and 2021 setups that preceded major altcoin rallies. The question is timing, and right now, the data overwhelmingly says Bitcoin first, altcoins later. Solana's futures data is showing some early signs of bullish positioning with the long to short ratio climbing. But XRP and XLM derivatives traders have turned bearish with negative funding rates of minus 0.0020% and minus 0.0048% respectively. This divergence within the altcoin space itself is worth monitoring. To wrap up this week's analysis, we are at a genuinely pivotal moment in this market cycle. The crypto market is caught between powerful bullish forces, including rising global M2 liquidity, accelerating regulatory clarity through the Genius Act and Clarity Act, growing institutional adoption evidenced by ETF flows and consensus Miami attendance, and record open interest suggesting massive capital deployment, and equally powerful headwinds from geopolitical instability in the Middle East, persistently negative funding rates, macroeconomic uncertainty around the Fed transition, and the psychological impact of strategy potentially selling Bitcoin. The next 48 to 72 hours will likely be defined by the geopolitical situation in the Strait of Hormuz. If tensions de-escalate, the technical setup with 67 days of negative funding and record open interest favors a sharp and violent move higher that could take us back to $82,000 and potentially beyond. If they escalate further, expect a retest of the $76,000 to $77,000 support zone where significant buy-side liquidity sits. Either way, the record leverage in the system means the move will be significant and fast. As always, manage your risk carefully. Never invest more than you can afford to lose. And remember that in markets like these, patience and discipline are your greatest assets. The data does not lie, and right now it is telling us to be prepared for a major move, but not to predict its direction with certainty. Thank you for joining me on Boni's Life. If you found this analysis valuable, please like this video, subscribe to the channel, and hit that notification bell so you never miss an update. Drop your thoughts and your own analysis in the comments below. I read every single one of them, and I learn from your perspectives too. I will see you in the next episode. Stay sharp, stay informed, and stay profitable.